Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi, everyone. Welcome to Top Stock Picks of the Week. I'm Nina Mishtra. I will lead off with my top stock pick, and I will then hand it over to my colleague Andrew Rocco, who also has a very interesting stock pick, one of the most important companies in the world. But let me start with mine. And my top stock pick today is Agnico Eagle Mines. So let me share my screen and talk more about gold miners, and this particular gold miner. So here, Agnico Eagle Mines, ticker symbol AEM. This is currently a Zacks rank number one strong buy rated stock. And gold has been doing so well this year. It has outperformed almost all asset classes. It is up about 27% year to date, whereas the S&P 500 index is up about 9%. And we know that this outperformance is a result of record purchases by central banks all over the world, and also all the uncertainty driven by trade tensions. So central banks have been buying gold, particularly following Russia's invasion of Ukraine, and they are trying to diversify away from the US dollar. So this accelerating de-dollarization trend could help sustain this rally. And of course, consumers in India and China have also been buying a lot of gold. Now, gold miners are leverage plays on gold prices. So they have done even better than gold. So Agnico has actually, this has returned more than 70%, 70% year to date. And the outlook still looks very good. So this particular company is one of the best in this space. So that is why I like Agnico. It is based in Canada with it's one of the leading producers, mining operations in Canada, Mexico, and Finland. Very strong operational and financial performance, and very robust balance sheet as well. And the company reported very strong results, beating on the top and bottom lines. And if you go to the detailed estimates tab on Zacks.com, so go Zacks.com's code page, you will see that analysts have been raising their estimates for the company for the current year as well as the next year. And that is what sent this company to Zacks rank number one. And now if you look at longer term price consensus and EPS surprise chart, you will see that the company had missed only twice in the past 5 years, and lately over the past 3-4 years, it has been consistently delivering those nice beats. And in fact, if you want to learn more, you can go to the company's website, investor webpage. You can learn more about their financial strength, recent financial results, and also their very disciplined approach to capital allocation. They have been returning a lot of capital to shareholders via share buyback and also repurchases, and also reducing their debt. So this company trades at premium valuation to the industry. But I think even that is pretty reasonable, and its premium valuation is justified because of its operational and financial strength. So as I mentioned, gold has been doing so well, but gold ETFs have not seen a ton of interest, and particularly gold mining ETFs haven't seen a ton of interest from investors. Retail investors have remained on the sidelines as far as gold mining ETFs are concerned. So on this chart, I have the comparative performance versus the S&P 500 index, and you will see that Agnico Eagle has returned more than 70%, almost 75% year to date, slightly outperforming the VNX gold miners ETF, which is the largest gold mining ETF, which is up about 70% year to date, and gold is up about 27%. So if we see more investor interest in this space, gold mining ETFs and gold miners, then probably these miners can continue to do well. And that is another reason I think why this gold miner is worth a look. And I will now hand it over to Andrew for his stock pick.
Okay, and thanks everyone for joining, and welcome to my top stock pick for Tuesday, August 12th. My name is Andrew Roco. I'm a stock strategist here at Zacks Investment Research. I also do manage the Tech Innovators portfolio, and today we'll be discussing a stock that we actually added to the Tech Innovators portfolio yesterday, and it is one that I'm long in my personal portfolio. So let's jump right into it. And that stock, I'm sure most of you know, is Apple, ticker symbol AAPL. It's a Zacks rank number 3 hold stock, and it's one of the world's leading tech juggernauts. The Cupertino, California-based company is best known for its iPhone smartphone, which dominates the smartphone market, garnering more than 50% of the market share in the United States. But today we're going to discuss a little bit beyond their hardware products, such as the MacBook Pro, the iPhone, the MacBook Air, and their AirPods. And we're going to talk about how they're diversifying into their services business beyond the iPhone. And they do have a new iPhone in the works, or at least it's rumored. So we'll discuss that a little bit too. But first, the topic of the day is that Apple scored a tariff exemption. And if you remember on Liberation Day, when President Trump levied reciprocal tariffs across the world, and especially on China, he levied even higher tariffs. That really impacted Apple's business, which obviously a lot of their products come from China, or at least they're produce the components there. So when you're one of America's largest and most successful companies, you garner access to the White House. So Apple shares cratered more than 20% in the 2 weeks following U.S. President Donald Trump's Liberation Day, as I mentioned. But last week, Tim Cook expertly navigated the situation, striking a deal earlier this month with President Trump to avoid tariffs on key Apple products by pledging a $600 billion investment into U.S. manufacturing. So that was a huge bearish headwind that was facing the company. Now investors don't need to worry about that. And remember, the stock got crushed on that. It's just getting back to those Liberation Day levels. So we can see some more rallying just based on that alone, in my view. But this is what I wanted to discuss, and that's Apple services and their growth in this area. So Apple services, it's a primary growth driver for the company. And over the past decade, the segment has grown more than 400% and continues to grow at a double-digit clip as areas like Apple Pay continue to be adopted by customers. So this includes Apple Pay, when you back up your phone, the App Store. So all of these go under the services umbrella, but Apple Pay in particular provides an opportunity for much more growth into the future. So the contactless payment technology is expanded into several international markets like Europe, Asia, and Latin America. Additionally, Apple iPhone users can add driver's license and state IDs to their Apple Wallet in several states. So that's just rolling out now. And I don't know about you guys, but I found myself using Apple Pay a lot more lately. It just is a lot easier than carrying around my card. So this way I only have to carry around my phone, and almost every store that I go into now accepts Apple Pay. So that's I'm really bullish on that area for Apple. Now, beyond that, of course, we can't talk about Apple without talking about the iPhone. So the new iPhone is expected soon. The latest version of Apple's iPhone is expected to be announced next month. And that should help to reignite growth in the company's biggest revenue driver. So overall, Apple is one of the steadiest, most predictable and consistent earnings growers on Wall Street. So it's not going to knock your socks off. Obviously, it's such a big company that's going to move a bit slower, but sometimes in a volatile market, it's nice to own a stock that is a little bit smoother. The growth is a bit more predictable. So that's why I have a sizable position in the stock. Now let's discuss Apple's underrated AI segment. So Apple, in my view, it has kind of a poor reputation for AI due to the lack of capabilities observed by many customers for its Siri personal assistant. And I don't argue that Siri definitely needs work, but behind the scenes, Apple has acquired numerous AI-related startups to bolster its offering and plan for the coming AI revolution. So even if Apple's a little bit behind as far as their in-house AI, they have the capital to go after these companies and go after these key employees who are going to help them play catch up. Additionally, Apple has inked a strategic partnership with what I think is the AI leader, that's OpenAI, to integrate ChatGPT into its ecosystem. And can't talk about Apple without talking about that pristine balance sheet. Apple's highly profitable business throws off more cash than almost any company on Wall Street, and the company is currently sitting on more than 50 billion in cash. And we did discuss how that cash hoard allows the company to buy back shares. So that makes for a more favorable supply-demand balance for the stock, and of course, it allows them to make those key strategic AI investments. But share buybacks in particular are bullish for the stock because it increases earnings per share. Remember, it's earnings per share. So if that number of shares outstanding decreases, it helps to boost EPS. And then it acts as a tax efficient method to return value to shareholders. And then finally, it underscores Apple's long-term confidence in itself, or Apple's management's confidence in itself. So it's always a bullish sign when a company buys back their own stock, and Apple has been doing that consistently for 12 years. And then I'd like to talk about the technicals. Now, for Apple, I'm going to go over some really long-term technicals here. And what I've found in working with amateur investors is that often they conflate technicals with being short-term focused. What I've learned that the long-term price action can help to smooth out the action and kind of block out the noise and give us an idea of the overall trend. So what we're looking at here is a quarterly chart of Apple. You can see a beautiful uptrend. We got this massive shakeout and then this hammer candle, and now we're clearing that high. So such a pattern suggests that the stock should see new all-time highs by early 2026, barring some sort of black swan or bear market. I think it's a pretty high probability that this stock moves higher, especially if the market's moving higher. And then finally, deep-pocketed options traders, they've been selling a ton of puts in the stock, which is actually a bullish thing to do. And then they've been buying a ton of far out of the money calls. So that gives us a little bit more conviction that a lot of big money options traders have been buying the stock. As I mentioned, Apple is one of the steadiest growers on Wall Street. They no longer have to worry about the tariffs. And with that new iPhone coming out, that should build some hype for the stock. So again, my top stock pick was Apple, ticker symbol AAPL. Again, my name's Andrew Roco. Thank you so much for watching. I did want to let you guys know we are running a promo. So if you want to go to zacks.com/promo, you can learn more about that. And once again, thanks so much for joining today.